without incurring or without facing any risk. It is important that when you're running a business, you're also facing a risk. Now, what is a risk? What are the kinds of risk? Let's understand this in the next slide. Now, see, risk is a loss which a business will face because of three reasons. What are those? Unforeseeable, unpredictable, and unfavorable event. When I'm saying unpredictable, for example, an earthquake, a tsunami, it is an unpredictable event which may cause business loss. Okay. Unforeseeable, for example, if you have a customer who goes bankrupt, it was an unforeseeable risk. Unfavorable event, when something doesn't happen in your favor. Okay, for example, a new kind of innovative technology comes in place which questions or which renders the goods which you are providing as useless. Okay, so always remember that business risk is a risk or loss which we face because of unforeseeable, unpredictable and unfavorable events. Now, what are the types of risk? See, there are two types of risk. The first one is speculative risk. When I am talking about speculative risk, remember there could either be a gain or there could be a loss. So, when that risk comes in picture, the business can either gain from that particular event or it can face a loss from that particular event. The first one in that is market fluctuation. Now, what is market fluctuation? See, sometimes what happens, for example, when you are selling a product in market, you require raw materials. So, sometimes the demand or the supply of that particular raw material may go down because of many reasons. Let's say, for example, if you are selling the wheat, okay, wheat products in the market, and if the supply of wheat is down, so then the production will get affected. So, because of that, what would be the scenario? The scenario here would be that your product is getting affected, you are not able to supply and meet the demand of the consumer, and you are not able to supply the goods which are required in the market. Now, the next is fluctuation in demand and supply. When I am saying fluctuation in demand and supply, this is related to the product which you are selling in the market. So, it can happen that the demand for your product can go down or it may increase due to some reason. Okay. For example, in festive seasons, always the demand for new clothes goes up. So, in that scenario, you will always see the demand goes down. But let's take an example. If the economy is not doing well and if people are not earning pretty well in that particular year, you may see the demand going down for your garments. Okay. So, this is the speculative risk which we spoke about. The next is pure risk. When I say pure risk, that means it has an opportunity of loss. The only possibility here is loss. You will only earn loss, you won't earn any profit. Now, what are the examples? Theft. If someone steals the goods which you have produced or the raw materials which you are going to use, or any such kind of theft will result in loss to the business. Then fire. Sometimes we store goods in warehouse or there may be a fire in the factory where the raw materials were kept, or there may be a fire in a warehouse where the finished goods were kept. So, in that scenario, the only thing the business will suffer would be a loss. Same goes with strike. If your employees decide to go in a strike, the production gets affected, and because of that, as the production is affected, you are not able to meet the demand of consumers, you are not able to supply them the goods and services. Okay. So, these are the two types of risk which a business faces. Now, let's move further and understand the characteristics of business risk. Okay. So, this will help us in understanding the business risk more in detail. See, remember the first thing, business risk is an outcome of uncertainty. All the events which I spoke about, they are uncertain events. There is a probability that they might occur or they won't occur. So, when I say it is an outcome of uncertainties, for example, natural calamities I spoke is uncertain. You never know when a natural calamity can occur. Same goes with changes in government policy. Let's say if government tomorrow decides to ban the product which you are producing, in that scenario it is a pure loss which you are suffering, and then we can say this is a business risk which the business person is going to suffer. Technology. Change of technology or new technology always poses a risk to a business. As I gave you an example, if you are making a product and if a better product comes into a market, the chances are the demand for your product goes down and people start buying that particular new product. Let's say for example, as we already discussed, Google is going to come up with a car which won't have any driver. So when it comes in the market, the other car manufacturers may suffer in terms of demand in the market. Okay. Essential to the part of business. Now see, as I have been telling you from the start, risk is part and parcel of business. Without risk, the business cannot be in existence. Now consider this, when you go every day out of home, you always face the risk of accident. So you face the risk of injury. The accident can be because you are walking on the road, or if you are driving a car, the chances are you may face a accident. Now you can understand the probability of occurrence depends. The event may occur, that is the accident may occur resulting in injury, or the event may not occur, so the injury might not happen because the accident didn't happen. Similarly, risk in business is also like that. It is an essential part. So when you are running a business, you might face either the speculative risk which we discussed earlier or pure risk. Without facing them, you cannot run your business. Now, what would be the amount of risk? See, the quantum of risk or the amount of risk would purely depend upon the size of the business. So the size and the nature of business determines the quantum or the amount of risk you are facing. For example, the bigger the company you are, the bigger the risk you will be facing, because you will be operating at multiple localities. So if I am talking about a company, let's say for example Maruti. Now it supplies cars all over India, so it suffers risk all over India, right? Also, the nature of business determines the quantum of risk. If you are into a business which is of perishable products, for example vegetables. Now vegetables have very short life. So if I am doing a business of selling those vegetables in the market, the risk is that people don't buy my product on one day, that is my vegetables on a particular day. And what would be the scenario? I would face the contamination of that. I would suffer a loss because the vegetables will not be eatable in the next day. They will, as they are perishable, so they would not be as fresh as the customers may want. So the size and the nature of the business determines the amount of risk. The next is, remember, higher the risk I am taking, higher the profit. Okay, let's take an example. If a particular buyer comes to you, he wants to buy on a large scale the product which you are manufacturing, okay, but in the market he doesn't have a good market standing. The business he is running has been into losses. Okay, to ease this example, let's say we have Mr. A and we have Mr. B. Now Mr. B wants to buy the products which are manufactured by Mr. A on some price, okay, but Mr. B doesn't have a good financial position and doesn't have a market standing of his business. So Mr. A can do one thing, he can charge a higher price for the products which he is selling. Why? Because he is taking a higher risk. So that would result in higher the profit, but then the probability or the chances that Mr. B fails to pay are very high. So remember, higher the risk, higher would be the profits. Now let us understand what are the causes of business risk. Why business risk occurs when you are running a business. See, first thing which I have been telling you is natural causes. So floods, earthquakes, any such kind which is any event which is caused because of Mother Nature is natural causes. Natural causes are beyond our control. We cannot fight against them, and hence business always suffers a loss whenever there is a natural calamity. Next is human causes. Now human causes would occur because of negligence, because of carelessness. For example, if you're keeping your finished goods at a warehouse and one of your employees or the warehouse manager accidentally lights a cigarette out there, and because of that cigarette the fire catches up. So that is a negligence on part of the employee, that is a human cause. This can be controlled. Okay, there are various provisions to control the losses or the risk which occur due to human causes. The next is economic causes. Now see, when I have been telling you about the fluctuations in the demand and supply of your product, or when the supplier is providing you raw material, if there is a fluctuation in the supply, or if the consumer taste or preferences changes, these all would be economic causes. Okay, these can be studied, and to certain extent these can be overcome in future. Okay, what are the other causes? The other causes could be technical failure. For example, if your machine, the other one is mechanical failure. Okay, so technical and mechanical failure is when your machine stops working for some reason, the production gets affected, or you would have heard about the virus which affected the entire world recently. So if something of this kind happens, the systems get affected. So there could be a technical issue because of which you are not able to run your business in an efficient manner. Now the question arises, if these are the business risks, how do I deal with them? So tomorrow when you become an entrepreneur, it is necessary for you to understand that you will be facing those risks, but then how do you deal with them is also something which you need to know. So let's understand how to deal with business risk. First thing, you can limit the risk by not entering into a risky transaction. Okay, I remember I gave you an example of Mr. A and Mr. B, wherein the data or the person or the buyer who was supposed to buy the goods from Mr. A, that is Mr. B, didn't had a good market standing, didn't had good creditability. So in that scenario, Mr. A could have avoided the risk by not entering into the risky transaction. Okay, the second way to deal with it is preventive measures. What do we mean by preventive measures? That is, we take certain kind of measures to ensure that the loss which can happen doesn't happen. Okay, when I am saying that, you would have seen in all the buildings there are firefighting equipments. Okay, what is that? It is a preventive measure that in case if the fire happens or fire occurs in the building, the firefighting equipments can help us to doze off that fire and limit the loss which can happen to that particular building. Similarly, insurance. See, if you have a car at your home or a family member owns a car, you would have seen we have to take a motor vehicle insurance. What is that? In case if there is a theft, in case if there is any kind of damage to the car, the insurance company gives you the claim. Whatever the amount of claim is there, it is being paid by the insurance company. Similarly, you can get insurance in business for the building in which you are operating, or the goods which you have produced, or even your raw material. Okay, so insurance in business is a preventive measure which helps you to take or limit the risk which you are facing. The next is provision for losses. See, timely provision of losses helps you to cut the risk which you have faced. For example, when goods are sold to Mr. B, for example, and he was supposed to pay the money in 30 days. If he fails to do so, what would be the next step? You will start sending reminders to him. Okay, and suppose if he fails to pay even after 90 days of the scheduled time of payment, then in that scenario the prudency would be that you realize this provision for loss. Okay, then the other thing is, to face the business risk is you can share the risk with other people. Okay, so you can share the risk with the manufacturer, wholesaler, by agreeing to the losses which may be caused because of falling prices. This is an example. For example, suppose a product is launched by a competitor in the market and they are pricing the product at a very low rate. At that time, you are facing a risk, right? Your loss is getting aggravated, your profits are getting affected. So in that scenario, you can rope in your wholesalers and tell them to cut the margin which they are earning on your products for some time, so that you can mitigate this risk. Okay, so these are some of the ways in which the risk can be dealt.